Which is a better investment for the next bull run, Ethereum or Polygon, Ether or MATIC? Well, let's take a look at this by the numbers. Ethereum here. Its ICO price was 31 cents. Therefore, the ROI, the return on investment in 10 years, 5,277 times. Whereas Polygon, MATIC, its ICO price was $0.00263, so 0.263 cents. 4-year ROI was 376 times. But does this bigger ROI number for ETH just mean that the token has had its run? And based on market cap, is it more realistic to expect higher returns from MATIC in 2023 versus ETH? So I've compared two of the most important parameters for both ETH and MATIC, and I've made my determination. We have a conclusion as to which one is going to be the better hold for the next crypto bull run. Let's talk a little bit about what's happening here with Ethereum in 2023. In a couple of months, in March, Ethereum has its next big upgrade coming up. We've talked about this. It's the Shanghai upgrade. This is going to enable withdrawal of staked ETH to the Ethereum ecosystem. And at the time of this video's recording, over 13.48% of the total ETH supply is staked. And from March 2023, a part of it will unlock for withdrawals. So this enabling of withdrawals is also likely to have some ramifications on the market demand for ETH, and that could have an effect, of course, on the price of Ether. Therefore, I plan to keep a close eye on ETH staking withdrawal schedules to understand their impact on the price of ETH. I'm going to keep you guys updated as well as far as that goes. If you don't want to miss these timely updates, of course, then make sure you're subscribed to Altcoin Buzz. But here's something pretty interesting. The Shanghai upgrade will also have an effect on Polygon, aka MATIC. How and why is something that I'm going to explain in the next section. But make no mistake, this will have an impact on Polygon in 2023. But let's talk a little bit first about Polygon in 2023, because it's clear that Polygon, again, ticker MATIC, they had a terrific 2022 with major mainstream partnerships, really with some of the biggest brands out there: Adobe, Disney, Meta, the NFL, Nubank, Reddit, Robinhood, and Starbucks, among others. And in 2023, Polygon is bound to make it big because of these four factors. So first of all, projects are migrating to Polygon. The end of last year, December 2022, saw 3 popular protocols migrate to the Polygon network. For instance, 2 major Solana NFT platforms, DeGods and Utes, they announced their move to Polygon. And more projects, of course, means more users and more token usage. Another major factor is the MasterCard Incubator project. On January 7th, traditional finance giant MasterCard, they announced an incubator program that's going to teach emerging artists how to use Web3 and blockchain tech. And the program is being called the Artist Accelerator Program. It is being developed in collaboration with Polygon. Third major factor is that NFT sale volume continues to spike. Polygon has effectively defied this crypto winter, this crypto bear market that we've been seeing, with a major spike in NFT sales volume. And finally, there's been a major uptick in users. Polygon also recorded more NFT users than most other networks, and this will undoubtedly translate into price action for MATIC. But here's something that most of us don't know, and what I alluded to earlier. Shanghai, the Ethereum upgrade, was originally expected to include additional, much anticipated enhancements, including photo dank sharding, a streamlined data sampling process that would make layer 2 transactions, like Polygon transactions on Ethereum, significantly cheaper and faster. But both updates were postponed to make sure ETH withdrawals could debut by March. Cheaper and faster transactions on Polygon will attract more users to Polygon and translate into price action. But of course, Ethereum developers have not announced any date about this upgrade just yet. Let's consider both chains here. If we look at the pros of each chain, we see an interesting development. On one side, Ethereum, of course, has the most devs and the highest TVL of all chains, 60% actually of all chains, compared to 2.59% on Polygon. So that's effectively $26.7 billion compared to $1.15 billion. Big difference. But on the other hand, we see Polygon with fast and cheap transactions. The other day, I wanted to buy a $15 NFT on OpenSea, and the gas fees alone for that were $11. That's $11 on a $15 purchase. So it's no surprise that for reasons like this, Polygon tends to have the full support of the Ethereum community. Now, Ethereum has a lot of institutional demand, which is a great thing in some senses because that's where a lot of the money is. And as a result, this has a positive effect, of course, on the price of Ether. For example, ZK Solutions, Optimism, Layer 2 and Layer 3 solutions building on Ethereum. Layer 2 deals with scalability and cheap and fast transactions. And then the Layer 3 chains deal with interoperability. The IBC on Cosmos or Quant are samples of Layer 3, by the way. On Polygon, we're seeing mostly retail demand. However, their list of Web 2 partnerships is impressive. They partnered recently with seemingly every big name in the Web 2 sector. And they all seem to want access into Web 3, and they've chosen Polygon for this. We're talking Disney, Starbucks, the NFL, Adidas, Stripe, Meta, and others. By the way, if you want to learn more about Polygon and its intricacies in greater detail, we recently did this deep dive video that's playing now. You can check it out. There should be a card popping up right about now. This is where we talked more about things like ZKs and rollups and about their partnerships. Let's talk about the narratives for a second, because we see that Ethereum's staking is very successful. And although you need to invest 32 ETH to become a validator, many people simply delegate their ETH. In other words, they hand over their ETH to a validator. Yield is around 4% on average. Soon, you will be able to unlock your staked ETH with the Shanghai update. Again, this is happening in March of 2023. Currently, holders are staking over 16 million ETH, and the withdrawal option for ETH is the main narrative for the Shanghai update. Ethereum also turned deflationary after the merge because shortly after the merge, the circulating number of ETH was declining. And this is thanks to a new burning mechanism with fees. Polygon, on the other hand, just completed a hard fork on the 17th of January, and this took care of gas fee spikes. It also reduced, by the way, the time for making a new block. In other words, improving transaction finality. Furthermore, Polygon is a prime mover with ZK Solutions. This is a technology that improves scalability in essence. Ethereum has a TPS, a transactions per second metric of 11 to 15, whereas ZK rollups can change that up to 5,000 TPS, maybe even more. Polygon also has the ZK EVM rollup coming. This is the first ZK technology that is completely compatible with Ethereum. It's going to reduce transaction costs even more and allow for higher throughput. And being a layer 2, it's built on top of Ethereum. And so as a result, it benefits from Ethereum's security. Let's talk about demand drivers and buy walls. So Ethereum attracts mostly institutional demand, both from Web 2 and Web 3. Whereas on the other hand, Polygon tends to be more for retailers. They attract some Web 2 institutions, however, not as constant investments. We also see a strong ETF demand for ETH. That's an exchange-traded fund. In other words, you can trade in BTC or ETH on a traditional exchange, so you don't have to go through a crypto exchange necessarily. Ethereum also offers a multitude of Layer 2 and ZK solutions. Companies and firms will also put Ethereum in their balance sheets for these reasons. Just the number of dApps alone in the Ethereum ecosystem is astounding. They have over 3,700. But that being said, Polygon hosts no fewer than 53,000 dApps. The reality is, as long as the ETH gas fee remains high, people will continue to see Polygon as a very suitable alternative. So, with all that information laid out, probably many would expect that Polygon may take this round. However, I'm going to give you a potentially less popular opinion. I think that Ethereum will outperform Polygon. And here's why. So first of all, the deflationary dynamics and buy walls ensure ETH dominance over Polygon. Buy walls are when a large group of traders, sometimes whales, but not always, when a large group of traders try to control an asset's price. This will, of course, suit their best interest. We also see rising competition in the Layer 1 space, which is not benefiting Polygon in the long run. Polygon sits at $1 as I record this video. That is down 65% from its all-time high. But at the same time, Ethereum, as well as Bitcoin, are down 65, maybe 70%. It is a clear sign that Polygon is overvalued at this price for a bear market entry. And so it's probably best to accumulate Polygon in the range of 50 to 70 cents and Ether in the range of $900 to $1,000.